Hello everybody, welcome to this webisode. I'm going to talk about what we see a lot at the dealership is people coming to buy a vehicle who have no credit or are first-time car buyer. So this video will talk to how to achieve an auto loan if you have no credit or if you're a first-time car buyer. In this situation, the bank usually has limited view of your credit report, basically because you have none. So when we pull you, you come up as a zero, means you have no reporting credit, no credit cards, installment loans, student loans, bank loans, home loans, basically no way for them to get a glimpse of your credit picture. The bank can underwrite you on three things: credit, collateral, and character. The credit, they can't see anything because you don't have any. The collateral, they know what the vehicle is. And then the character, they don't get to meet you because most of the banks underwrite remotely, so they're not here at the dealership to actually experience your character, talk to you about your job history, and that kind of stuff. So first we'll talk about the credit. Since you don't have anything, most banks require that you come up with some cash down to show some participation. A lot of times if you're buying a new vehicle or even a used vehicle, they will require 20% down. Sometimes that can be lower, can be higher depending on the situation of your credit application. What I mean by that is job history, time at your job, that kind of stuff, mitigating factors. So essentially you would need some cash down, generally 20%. This is based off the purchase price of the vehicle. Once again, the bank lends the money based off the loan to value, off the clean trade-in, or blue book value. They use NADA, so whatever valuation source they're using is what they base the loan to value off of. The other thing they might require is to do a phone interview. A lot of times with a phone interview, you just get on phone with the underwriter. They talk about job history, where you live, your residency, ask you a couple questions. They generally do this if you have no score at all. The phone history is a great tool. They also will require proof of income, proof of residence, so the steps that you'll need to get approved for the loan. A lot of times dealers will like to have all this information up front so they can get you qualified and approved before you take the vehicle. The idea being they don't want you driving the car until they have an approved contract so that they can get funded for the loan. So yeah, a lot of times too, if that route doesn't work, what you can always do is get a cosigner. Cosigner can be friends, family. Generally, if they live in the same household, the cosigner's credit will apply to your rates, which means you'll get really good rates based off the cosigner's credit. Now, if they are in a different address or a different residency, and they're not directly related, a lot of times you still get the rates based off having inexperienced credit and no score, but you will get approved with the cosigner. The cosigner is personally guaranteeing the loan, so they are on the hook for the money. Basically, if you don't pay, they're going to be forced to pay. If you pay late, the payments go on their credit as a late payment. Very important to keep in mind that when you co-sign for a loan, it affects the person's credit as well as yours. It will build their credit and it can hurt their credit. So it's very important if somebody co-signs, you pay the loans on time and you don't make mistakes with your credit. So hopefully that'll help the first-time home buyers. If you have any more questions, let me know.